Hi, welcome. It's Mary Ellen McGonigal, Senior Managing Director of Stocks here at Simpler Trading with your weekly Edge show for Friday, September 3rd. Let's take a look at what we're going to be covering today. As always, we're going to take a look at some of the headline news and the potential impact on the markets of that news, and then also take a close look at where the markets are currently. Of course, we want to make sure that there's a healthy backdrop before you potentially put new money to work. And then I'm going to share with you two of my favorite base breakout stocks from this week. So let's go ahead and get started. Here we are with some of the news that was released this week. First up, consumer confidence dipped quite a bit to a 6-month low. A lot of consumers concerned about that Delta variant spreading, as well as inflation still a concern. But we did see positive news on the manufacturing side. Production did increase in August, and we also saw an increase in factory orders. So positive news there as far as the economy continuing to expand. However, today on Friday, we did see one of the smallest increases in monthly jobs in August in 7 months. And originally it was quite a shock. The markets did sell off. However, they are recovering into the close. Next week, it's a holiday shortened week. Only a couple of news items that are worthy. That would be the weekly jobless claims on Thursday. And then we'll see the producer price index being released on Friday. So from here, let's go ahead, take a look at the markets and peek down deep into the markets to see where money flows are taking place right now. So here we are. Here's a daily price chart of the S&P 500, and we can see it remains in a very nice uptrend, finding support above these shorter term simple moving averages, and then also your outside momentum indicators. I like to use the RSI, relative strength indicator, and then stochastics, both momentum indicators, and they're both trending upward and in positive positions. So overall, your upside momentum remains in the broader markets. So from here, what I like to do is go ahead and take a look at some of the underlying sectors within the S&P 500. And what I've done is listed these sectors with a relative strength indicator, sorting it in descending order. I want to see where the strength is currently in the markets. This is a 2-month daily price chart of those sectors. We can see that REIT stocks are really powering to new highs up here in the forefront. For my work, I tend to gravitate toward higher growth stocks, and healthcare and technology are both up here in the forefront. Each have really strong pockets of strength. Within healthcare, it's basically your medical products stocks. You can look at the ETF IHI and uncover those top holdings to see some really strong names in there. Within technology, we'll get into where the strength is there as well. And then as we move down, some of your weaker areas, these are the economically sensitive areas continuing to remain fairly weak. I am keeping my eye on energy as it attempts to reverse this 2-month downtrend. A couple of names in energy that have already reversed their downtrends, and you can subscribe to my MEM Edge report. I have a special offer and I'll share that with you there. But for now, what I wanted to do was drill down further beyond these sectors. Take a look at some of the sub-industry groupings in the market. Again, sort it strength to weakness, and take a look. The NASDAQ up here again at the forefront. It's up 1.5% so far for the week relative to the S&P that's up a little more than 0.5%. A lot of that is large cap growth stocks continue to outperform. And then here we can see software stocks. I use IGV, the ETF, really powering up here, continuing to hit new highs. I am going to share a base breakout from that group with you today. And as we move down and take a look at some of the other dynamics, the dollar is continuing to weaken. And this in turn will usually boost commodity related stocks. And that's going to be, for instance, oil prices here, gold, and other commodity related areas. So let's go ahead and I'll share with you a couple of names that really caught my eye. I do quite a bit, of course, in the way of screening the markets, always on the prowl for outperformers that are poised to continue to outperform. This is Deere. A lot of you, I'm sure, are very familiar with the company. DE is the ticker symbol. And we can see that today the stock is breaking out of this base here at the 390 level. Actually, we're just now poised to break out of this nice 1 month base here. Volume is very constructive, and we can see your outside momentum indicators. Your RSI is positive, MACD having that black line up through the red. That's a bullish momentum indication. And also important is the fact that Deere is now poised to break out of this 4 month base here. So if we can get up to that 400 level, further upside potentially ahead for Deere. The company released their earnings late August, and they showed 107% year-over-year earnings growth. The stock was held back due to dynamics within industrial and cyclical groups, but it is now picking up, also on the heels of a Goldman Sachs upgrade to the agricultural business. So from here, let's go ahead and take a look at another stock that I mentioned that had a base breakout, and this is DocuSign, D-O-C-U, and the company came out with their earnings today. Take a look at the volume, huge volume on this advance here. They showed 176% year-over-year growth. The stock at this time is poised to break out of this 5-week base. If we can get up above this level here at about 312, that would be very constructive. And let's take a look. Your momentum RSI trending upward, up above that 50, and then that MACD appears to be having a black line up through the signal, positive crossover, and that's what you want to see coupled with this volume that would help the stock propel higher from here. What we can do is drill down. I know 5% you think that you are, in fact, potentially chasing the stock. Drilling down to an intraday chart can be really quite helpful. And here I have a 1 hour price chart, and what I've done is added a 5 and 13 hour simple moving average. I find that to be really quite useful. And what you can see on this 1 hour is most of today's action took place during that 1 hour. What we are going to be on the lookout for potentially is a little bit of a consolidation. It's at 5% was a big move, certainly for this particular stock, but these volume characteristics are telling me that further upside is ahead for DocuSign. What I will want to see is the stock trade back above this shorter term 5 hour. It looks like we're on our way to that now. We can drill down a little bit further to that 15-minute and see how we're shaping up into the close. Gives a little more definition, again, that 5 and 13 simple moving average. So a little bit more of a move above that. Your outside momentum indicators are still positive. Ideally want to see that black line cross up through the red to signal further upside. Near term, longer term, DocuSign does look quite constructive. I'm going to leave it at that. Everyone have a wonderful long weekend, and I will see you back here next Friday.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me